So let's have a look at the Australian dollar, which over the weekend did fall into the 50s. It's back there now. So 59.9, give or take, it's around about that 60 cent mark. It was always suggested to be there. So really seeing the Australian dollar as low as it is shows that's the buffer that really keeps Australia competitive when the markets are falling in the way in which they are.
So the Reserve Bank's got all the levers at the moment while the government is in caretaker mode. What will it do here, Ross? Because obviously, like investors, the Reserve Bank would be worried about a prolonged economic downturn, not just in America, but Australia would never be immune from something.
And the one thing it can do is cut rates and cut them quickly. So I pulled out some data off Reuters this morning. This is money market odds. So this is from here until December. So if I look, say, for example, even at next month, there's an 85% chance of an interest rate cut next month in May. But if you go out until December, what you can see is there's a 100% chance of at least one rate cut. There's a 99% chance of 2 rate cuts, an 87% chance of 3 rate cuts, and a 58, nearly 59% chance of 4 interest rate cuts this year. In fact, there's even suggestions, lesser so the odds of even 5 rate cuts. But I left it at 4 rate cuts. I thought that was probably reasonable, but it shows you that even in these past few days of markets have rocked around, the odds of those rate cuts have increased significantly on money markets. Yeah. So what's happened is that bond prices and therefore interest rates have fallen. Bond prices gone up, interest rates gone down. And this is as a result, again, of the risk of recession. People wanting to be defensive, throw their money into cash, throw their money into government bonds because they figure that's the safest place to be right now.
What about superannuation? Retirees will probably not be logging on to look at their accounts today. But I want to ask you, and this is a question that we're getting for a lot of our viewers.
Well, I'll give you a small hint on that on the superannuation, right? Yep. So the typical fund in Australia that most people would be in, a balanced fund, would have 40% in Australian shares. Now, Australian shares are down the best part of 16% from their peak. So you've got to sit there and say, well, that's give or take going to be the best part of 10% or something like that. Then they've got another 20% to 30% in overseas shares. They're down not quite as much, but probably down by about 12%. So there's another bit of it gone. So probably if you tried to really say from here until June 30, what is your super fund looking like? This is going to be one of those years which happens once every 7 years or so where your money goes backwards if you actually took it as of today. And so really in many ways people have had great runs as stock markets hit record highs, but now the problem is going to be, especially for people who might be considering retiring, they might have to seriously rethink their plans and stay in the workforce for as long as they can.
Right, well, that's a scary proposition for many, I would have thought. And I just quickly wanted to ask you about the cyber attacks on our big superannuation funds. This is seriously concerning. We don't really know what the losses are, and coupled with these share market losses, and this is a question that many retirees give me here at AM Agenda, is how do you know the difference between the losses from the share market and the potential losses from a cyber attack? Will there be the regulator that makes sure there is a clear understanding of where those losses are?
See, to me, I've got a big problem with this because if these industry super funds that have been affected by this, they don't have reserves of their own necessarily. So in other words, it's shared between the group. Now, I'm not particularly comfortable about that. Yeah. The organisation should have reserves of their own. If it's of their making, why is everybody else actually sharing the pain? Now, it's supposed to be very small, but there's a principle here for the future that needs to be thought about, especially with mutual organisations like these are. And especially if now all the directors are all covered because they all have directors' liability insurance, of course. They wouldn't otherwise do it. But there is a big issue here about whether our big super funds now are becoming too big. It's been a conversation that's been had for quite some time. And of course, government is trying to centralise more power, especially with some of the tax changes that they want to have more people putting their money into industry super funds rather than doing it themselves. Tell you what, Laura, before we go, let's have a look at the ASX 200 and just see where it sits at the moment. We should be able
just
to bring that chart up. We can see it's down there in the corner there. We'll keep updated with you during the day because it obviously is a very big day for our stock market and for investors all around.
So we can see at the top of the screen there, a tiny rating, but just below 6% now. So it's come back a tiny bit, but you expect that to be volatile throughout the day.
Exactly, it will be indeed.
Ross, thank you. Appreciate it.